Hey guys, username here, and I have a couple trades to go through. On SPY today, it was a choppy day, um, but I had a trade plan put together that just happened to coordinate with what the markets wanted to do in the first hour. So I did have three trades today. Calls on SPY to write it open, like 9:32, and then I did some puts that were when it went below and confirmed my break below. And then I did a Netflix trade later on in the day. But so this is let me just start with how I kind of frame in the day. This is a naked chart that I have. I've had these levels on there for a while, but and I added to them. So I had this level on here for a while and this level on here for a while, and I recently added this one. But this kind of boxes in where we've been just during this period, right? And we've been in this area the whole time. We've just been bouncing between it, and right now what we're doing is we're consolidating. So what am I expecting? I'm expecting probably more consolidation because this is still pretty wide consolidation. But I'm also thinking there's a possibility we break out. We can break out 413, 414, 415 are decent levels. And then we've got all the way up to 418. The size of this consolidation would give you your measured move, which is, about up to the same place we rejected. And on the way down, the same place we rejected, just based on where this consolidation is. So, my overall expected maximum move for the day would be actually from this 412 probably down to 407, probably down to this level that we've kind of sat in a few times. Not all the way down, but on the way up, maybe this 417. So $5 either way, maybe, would be a good way to put it. So this is kind of how I boxed it in, and then I go back to my normal TT or TABB system of doing things with daily emerging and stuff like that. I do have some color coded, and those are for like CP between daily emergings that are broad, or it might be the bottom of a gap up. So if I have a big candle and then a gap up and another big candle, I use the gap up sometimes. But the one thing I wanted to point out in here is I put this huge supply zone and this huge demand zone. And this huge supply zone is the peak of where we got back in February. And every time we've touched this zone, I put this bottom right along a level I already had, this 414.37 or 414.35 or whatever it is. Every time we've touched this, we've rejected. We've played around in a little bit. We've even closed some candles in it, but we've always rejected this zone. So this is a huge supply zone that I just am aware of to make sure that if we get up in there, it doesn't mean we're going to moon. And we recently rejected it at the top of this consolidation. We started consolidating. The bottom one here is once we came up and broke through it, we were either above this range or below this range the whole time. So we had a few days above it, quite a few days below it, and then the last, from 331 to 516, the last month and a half, we've been between this. So if you feel like you've gotten messed around the last month and a half, I know I have. We have, other than a couple of days through here that were really volatile or really trendy, we've had a lot of choppy days, a lot of chop in here. So, and we're getting into that now. We're consolidating. We're getting tight. So what that tells me is we're, I anticipate getting tighter, but eventually we're going to break out. Whether we break out a lot or not, or get continuation is another thing, but we should have an impulsive move out of this consolidation at some point. So this consolidation is kind of what I was focusing on in these levels that we were in between. And this is that consolidation. I've got kind of a broader one, and then I've got a smaller one that went from yesterday's high to pre-market, and this is, I say pre-market high, but this was a 3:30 candle, not the 4 o'clock. I like to use the 4 o'clock because it corresponds with every other, opening pre-market range. So we've got this consolidation that's a little bit smaller, and this consolidation coming up. Now, this range here, two daily emerging ranges. I colored this red because it's my break below for today. But you can see here in this range, we rejected, came up, bounced down, in this consolidation. And then we bounced up and we bounced off of it, bounced off of it, bounced off of it. And then in the extended hours, we also bounced off of it. And then right before open, we're down right on it. So, what I'm thinking is, and again, this is pretty fluid because, up till 8:30, I start looking at the charts somewhere in 8 o'clock, 7:30, 8 o'clock range. Up until 8:30, we got this volatile candle. It was, there was no trade plan yet because we were really in the middle of this range. But right before open, we're down at the bottom of this range, and my trade plan really came together. It was like, hey, this area we bounced off of, we're either going to bounce or we're going to reject. If we're going to reject, we've never not gone down to this 410 range, just below 411, right? Every time we rejected this, we've gone down pretty far. So I've got a scalp there. If we go down, I've got a scalp there. If we go up, I've got a scalp to this 413 range, because what has happened every time we've hit this 413 range? We bounce up and we reject. Now here we stayed up above it a little bit in the pre-market from the other day, but just recently we've bounced, reject, bounce, reject, bounce, reject, and it's the top of this consolidation, the smaller consolidation line. So if we don't break up, we're going to reject this anyway. So this was a good marker. So I'm scalping from, the bounce here. I'm scalping up to here, and then I'll hold runners to see if we get an actual breakout. Same thing in the bottom. Now the bottom is actually a breakout, a breakdown of this consolidation too. So then, I'm looking, maybe I get down to, under 411. We'll see. And that's also if I get in right at my level too. So we'll see how it goes. But I've got a pretty decent plan going into it because we were right by one of the extremes. So when you're by an extreme, it makes it easy, especially one that you've bounced off of. You've either bounced or rejected off of. So this was a really good spot for the market to start at, for me, for my trade plan. So this is right before open. This is like the minute before open. And again, here's my 8:30 news volatile that I ignore. But really what I see here is a secondary consolidation that has been going on in the pre-market. I've got this little wedge, this little lowering wedge consolidation getting tighter. And so what happens when you have a lowering wedge like that and you're right by these levels? You're either going to bounce like it started doing right before, or right, you're going to break up or you're going to melt down. So this, again, more confirmation that my trade plan is, at least reasonable, right? You can see here's my calls, so you can see what I did. I got into calls. But let me just skip forward and show you why it made sense for me. The best thing that could have happened at open is a little bit of a bump up to the top of this consolidation and then testing this level that I wanted to bounce from. Why is that good? Because we test the level. We basically went the range of this whole consolidation in one candle. So that tells me that buyers and sellers see that range just like I did. Second candle, very similar, gets a little bit higher, doesn't get lower though. If that candle would have gotten lower than this one, if it would have gone down here, then I would have been a little concerned, because that's a reflection of volatility. Got a little bit higher. If it had gotten a little bit lower, especially right at open, one of the things that is rough about the open is it can get very volatile very quickly. So the second candle was also very low volume, meaning decisions weren't made yet. People were waiting. And then right after that, we go up. So what was my trigger for going up? Well, if I'm playing this consolidation, and let's assume let's assume that this consolidation gets tighter all the way down to here. And our breakup out of this, let me just draw this down further. Let's say our breakup out of this was this candle right here. The first place I would set for a target price would be this high here, this kind of mini swing high that was in the consolidation, right? So that would have been the first place that I would scale out. So we didn't do that, but what we did do is we did break up here. We did break up out of this consolidation. Let me just try to make that more true to how I had it drawn. So we did break up out of that consolidation, and when we broke up out of that consolidation and broke up above 412, I got into some calls here. So I got into, it says 11 at 98.7272. So, but really what I did was I got into one contract here. Yes, a literal single contract. And then I get into about 10 of them somewhere up here. Originally that one was supposed to be 10. And I realized pretty late that that was 1 instead of 10. So, I thought, look, this is, we've got momentum, we've got more volume, we've got a huge volume bump off of indecision. So I'm just going to go in, and it's still a partial position. So at this point, let's see, was I in 11? Yeah, I got 11 there. And then we immediately, after I did that, we immediately came back down and tested my breakup of 412. So we held that, and I'm thinking I'm going to get in a couple more down here. And so I got into 3 more down here at 94. And my, breakout, retest, continuation is what I was thinking. I was not expecting this to happen. We kind of played around a little bit at this level, and then we kind of rejected it, but we've got really low, these first 2 candles, this is a fighting candle here, had increased volume, but it's still significantly lower than my buyers. Then we got a pretty weak buyer candle, and then really weak sellers until this really big drop. This one, I was ready to get out of everything. We spent a lot of time at the bottom. It didn't feel like a retest. It felt like we were exhausting the buyers, and it was just going to plummet. And so I was really ready to get out of all these. In fact, I was so ready that I didn't. This gray area here, this gray oval, is where I should have gotten in the 20 contracts that I got in up here. I was so worried about getting out, and really I was anticipating this taking a loss at the first, right out of the gate, which I was still in a partial position. I was in 14 contracts. I added 20 up here, so I was in a partial position. So it wasn't going to be a thing, right? It's a loss. They happen. You take them. So I should have entered here because I had this flag. I didn't draw this till later. I didn't draw this till I entered here and realized, man, I missed the boat. But this is a really nice reversal candle. It's off my same level. I mean, everything's telling me to get my 20 in here, which would have been, where would it have been? About 85? Are you kidding me? Maybe 85, 86 cents instead of 101. That would have changed a ton. 101 to 85. What is that? Like 15 cents on 20 contracts. That's $300. So there's a $300 difference in how I ended up because I missed this entry. But, I am working at adding to a winning entry. I'm working at if I'm getting more confirmations. So what were all my confirmations? I've got a consolidation that breaks up like I thought it would. After we bounced this level like 3 times right before, 4 times right before open, confirming that this is a strong level, confirming that my thesis of bouncing off this level is true. We actually do it. We come up here. We do it again. This is like a final confirmation that we're getting our move because now we're getting volume. So by the time we get to this candle where I actually got in, we were already seeing the volume, right? I got in halfway through this candle, maybe 30 seconds, maybe, I think. I can't remember, but I already knew that this was a high volume candle. I got in, right as we were peaking here, which is a rough part to get in. So I wanted to wait until we didn't get a lower high. Like this was kind of a lower high versus this. So I wanted to wait till we didn't get a lower high, but I also knew that I had confirmation. I just needed to get in. If I waited, I was kind of chasing. I was halfway chasing here. I could have gotten in down here too when we broke over 412 at the beginning of this candle, and we didn't even wick down. That would have been a really good place to get in too, right? So we got in here, and these are actually, I need to remove that. Those aren't even correct. If I look at this, I got an 11 at 98, 3 at 94, and 20 at 101. So let's just say my average is $1. So if I get in at $1, and this shows I got 20 out of 34, I got out at 122.25. So if I hover over this, you can see I got out of the majority of them at 115, 5 of them at 130, 5 of them at 129. So, 122 is my average. So 122 off of, that's a 22% gain there. Got 5 out of 5 at 140, so that's a 40% gain. Here's a 10% gain, and here's a break even on my runners that, didn't make it. But what happened? I said that my plan was to bounce down here, to break out over 412, this consolidation. Break out of 412 and scalp to this next daily emerging level. To this next daily emerging level here, right? That was my plan. To bounce, to scalp. Not a huge move. So 412 to 412.84, but it was worth 40% up to, the peak. Now I'm lucky I go right before the top, so I don't always go to the level. I go just before, just to make sure I get taken out. These I scale out. I just did the average here, but I had those 4 of them, and I want to scale out starting at 15%. So 15 and 30% is where I scaled out of those. So 115 would be 15%, 130 and 129 would be 30%. So just that trade alone was fine. It was great. The 140 is nice. The 110, I guess I didn't even put in, did I? Looks like somewhere in here is the 110. And then these got out at 99, so pretty close to break even. So that's my call. It did exactly what I thought it was going to do. Not what I thought it was going to do. It did what my trade plan was set for. I didn't know what it was going to do. But I had, based on levels, based on, basically based on trader psychology of, 412 being a psych level, getting another bounce off here, going up to a daily emerging, which isn't a huge run, that's what it did. So my next entry was a put entry, or put trade. And you can see, you remember this red line was my break below. It was the bottom of these two. One was going to bounce, one was going to be my breakdown. And when I got stopped out on these, we broke down. This would have been a really good reversal. So it would have been a good place to go short while I'm getting out of my longs. Just all the best time to get out of a long position is when it's invalidated. And here it's invalidated at the same time that a short position is kind of, breaking out. So, if you see here where I got out, and then let's go over this way, we got a really nice retest to that just about the same level, which is another confirmation that would have been a fine place to, for a 40% entry. Breaking down here would be a fine place for an 80% entry, and this is where I got in down here because it did get below my level. So it went in here. I added, once it broke the bottom of all these candles, which I'm going to call it a new low only because that was a very volatile, impulsive candle that I never saw it hit those prices. I saw it drop from about here, and then it just went swing and bounced right back up. So I don't know what that was, if it was algos or whatever it was, but so this was really my new low of day. So I added here because it broke below, and we had gotten, you know, really nice volume in this candle, really nice volume here. So, you know, just another confirmation. We had a breakdown, again, pretty close to where, I mean, just when you look at the price action, this is a nice three bar play down. So we had a breakdown, retest, breakdown again, below my level, added again at low a day, scaled out at 16%, scaled out at 33%. These, I completely messed up my stop loss, and this ended up being a 30% loss, 31% loss on those. So I got in 20 contracts. I think I got out 10. Puts. I got out a few of them. What am I doing? Oh, here's where I got out. I got out 10 of them at 87 from 70, about 75 to 87. So that was that 15%. And then I got 5 out of the dollar, and then 5 out at 52. So that kind of offsets that. So I basically ended up with a 15% play. I'm guessing a 16% play, approximately. But I messed this up because I had my target price was set way down here. And when you set a limit order, usually what I'll do is I'll set a limit order, and then I'll set my stop loss as an OCO. One cancels the other. So when one's hit, it cancels the other. And what I did was I had my target price set. I do it here in my ladder, and you can see it show up down here. Well, then I had scrolled, I kind of zoomed in a little bit, and I couldn't see that it was set. So when it broke up here, I was just going to sell at the market. And, you know, because I'm kind of watching this. This looks like a really nice cup and handle breakup, and I was thinking, okay, we could either reject this, and it's going to come back down, or it's going to push up. So I go to hit this, and my system freezes. I can't click anything. I don't know what's going on. Well, I have two screens. I actually have three screens. I have two that I trade off of, and then a third one that's on my laptop that's kind of behind me. And on my third one that was behind me was the little error message that said, you already have an order, you can't do this. And all I had to do was click a button on that. So while I'm messing around trying to figure out why my whole system is frozen, I finally look over here in my ladder and notice that I had already had my target price set. And so then I get out of that and close out. And by that time, you know, it's like 3 minutes later, and I'm just trying to get out. I wasn't even going to wait and see if it came back down or not. I knew I was way past where I should have been, and just needed to get out. So that was a mistake. You know, what happens. Whatever. It is what it is, right? So that was a decent trade. And then I also got into a Netflix trade. And I did the same thing. Started out light, and then like really doubled down. That ended up being a decent trade. Well, you can see down here, that put play, because of that minus 35%, was, you know, I got $140 on it, and, you know, it really should have been, you know, a fair amount higher than that. You know, a couple $100 on that at least. But, you know, these base hits are decent. The Netflix was better than a base hit. Obviously, you know, that's a decent amount. But, you know, these base hits are kind of that's my deal. I'm getting really used to that scalping the first percentages, and you know, up to a level, seeing if you get runners. And if you don't, then you just stop them out. No big deal. So let's see, actually, where did I get this? 410.74. So remember this, we were looking at different levels. 410.74 was right about this level. So if we were going to get puts, this was a really good level to scale out before this down here, right? And I'm just going to push that past. And where did we scale out? We scaled out exactly there. So right where we bounced off on this nice little cup and handle the last time we rejected this. So it does make sense, right? We reject it. We mess around down in this area before we go lower. We reject it. We get a bounce off this area. Again, we go through it again. We do wick down, but we settle and bounce around here. And this is on a 30-minute. Bounce around here. So it does make sense to get out of it in this range. So, I mean, there's a really good trade plan. And the market just happened to work right. You know, the price action on the market today matched the chart the way that I had charted it. So, was it a choppy day? Yes. Did I didn't do anything different than I do every other day. It's just that this day all my trades worked out, and usually they don't. At one point I was about 80% win rate, and right now I'm probably I haven't actually calculated in a while, but I might be 50% win rate now. Today I just happened to go 3 for 3, so this is a pretty rare day. But again, this chop and choppy days like this, it's different. It's different than when you're trending every single day, and you get clear signs of reversal. And you can look at a daily, and you can almost know what's going to happen at open. If it does this, if it breaks this level, we're trending up. If it breaks this level, we're trending down. That's not where we're at this year. And so this is kind of how I've approached it. Today just happened to work all 3 times. So hopefully this helped. Hopefully it made sense why I picked my levels, and why I scaled. I scaled out simply because we've had so many choppy days, so I've decided to scale out at 15 and 20 or 25, 30%. But I also play the levels, definitely play the levels. And it's about everything I've learned from the BB course, along with just everybody in the Discord, and screen time, thousands of hours of screen time. So again, hopefully this helped. If it left you with any questions, go ahead and drop them in the comments down below, post them in Discord, hit me up on Twitter, whatever. And until next time, we'll see.